just tired.
Okay, I will record the class. So
Okay, thank you.
the important thing is for you to know where the market is heading to. Now, once you know where the market is heading to, that is when you need to start looking for your reference points. Now, what I mean by your reference points, your points of interest, like the order block, the breaker block, the liquidity, old high or old lows, all those things. You need to know where the market is heading to. Now, once you know where the market is heading to, can you please, Peter, can you please remove your video? So once you know where the market is heading to, all you just need to do is to start marking out those your reference points. Now, today we are going to be looking at order block. Order block. Now, how to select high probable order block, how to mark them. So I will share my screen now. Okay, now in this market, you can see that the market is trending downward. Are you seeing it? The market is trending downward. Now, order block is that opposite candle that is printed against the trend. I don't know if you understand that word, or let me use another word. When the market is selling, every up close candle or every buy candle is an order block, is a bearish order block or a sell order block. Let me rephrase that again. When the market is selling, every up close candle is a bearish order block. So that is a reference point for you, that whenever the market comes back to that place, you would likely see a reaction in that area. You would likely see a reaction in that area. And you don't want to see an order block like this, where this white candle, we have this white candle here, then there is no movement away from it. You can't take that as an order block. You want to see a clear movement away from it, like this movement now. Then a return into it is a sign that the market has potential to react at that point. So that's an order block. When the market is trending down, every up close candle that is printed before the market gets to its target is referred to as an order block. And when you are marking the order block, you mark the body of the candle, not the wick. The body of the candle, not the wick. The only time you mark the wick is if the wick is part of a fair value gap. If the wick is part of a fair value gap. So now let's mark some other block. This, I will start with this one. Then I will go to this one. Let's start with this one first. Now this is an up close candle in a sell trend. So that's an order block. How do you mark it? All you do is what? Bring out your trend line. Now this is your trend line. Put it at the body of the candle. That is the open of that candle. you now you what's it called, extend it towards the right. Anytime price comes back to that point, that is a reference point. This is D1 chart. I will show you on M15. I will show you on M15 where price reacts. Can you see? This is also an order block. Now we have these two up close candle in a sell trend. So both these two up close candle, both of them, they are what? Order block. These two up close candle, both of them are what? Order block. So how do we know that this order block is a highly probable order block? Is when we have a movement away from it like this. Then once price returns into it, then we can start hunting for a setup around that order block. Now when you see an order block, the places that are very effective in the order block is the open of that order block and the main threshold, meaning the 50% of the order block. We are not looking at the wick, we are looking at the body. Now if you look at this body, from this top to this bottom of this body here, there are one order block on the weekly time frame. So that is why we are marking it as, one. That's why we are marking consecutive up close candle as an order block, because on the higher time frame it is just one candle. It's just one candle like that. I don't know if you are getting me. Are you guys getting me?
Yeah.
So that's what is referred to as an order block. Also this one, these two up close candle here, these two up close candle, they are order block. So when price gets there, it can also get to the 50% of the body of the candle before we see our setup. So it doesn't mean when price get to this body here, it will start rejecting. It can get even up to this wick here before it starts rejecting. Or you just need to, the reason why, but most often than not, in fact, most time, it will just wick through and come back and close below that reference point. That's what normally happens. Or sometimes it will wick through, get to this point and close a little above or below the 50% of the other block. That is the main threshold. So I will show you some examples. Let me remove all this one. Let's go to M15. So this is what we call bearish order block. All up close candle in a sell trend, they are what? Bearish order block. Now look at this order block. Look at this order block in a sell trend. Look at how the market moved. It moved away from this order block. It moved away from this order block. Can you see it? It moved away from this order block. So now mark it out. This is it. Now, can you see the 50% of the other block? And you can see how the body of the candle closed below that 50%, but it wicked through. So the wick are just they are doing the destruction. Are you getting it? But the 50% of the other block, that the main threshold, was respected by the body of the candle. It was respected by the body of the candle. So this last up close candle is another block. Now price moved away from this other block. So this one also is an other block. So when it has your other block failed, this is another block. Can you see it? And you can see the way price is still respecting this other block here. Let me extend it through. You can see price is still respecting other block because this particular other block is inside this other block. Are you seeing it? When price came through, it violated this order block, but it was still respecting this particular order block. Now, can you see this particular? Now we don't even have a trend here. There is no any trend here. So you can't say this one is an order block. You can't call this white candle an order block. You can't call this white candle a bearish order block. You can't call this green candle a bullish order block. You can call this green candle a bullish order block because there was a movement away from it and a return towards it. Now look at the 50% of that green candle. Price closed above that 50% and did this movement upward. You can see it even got to this point before it starts selling again. So that's how to use order block. You have to have a good move away from the order block before you consider to use that order block. Now we have this order block, this particular one, this last two up close candle. This last two up close candle. Now look at the move away from it. Look at the move away from it. Now you mark it out to the right. You mark it out to the right. You can see how this, it came down, move away from it, came back and trade into it here, feel an imbalance inside here, a fair value gap, and started going down again. Are you getting it? So that is now an order block. This one also, this particular one here, because there's a movement away from it, is also a bearish order block. It's also a bearish order block. Now you can see the 50% of that order block. It weak through, it weak above it, but what price still close below it. Can you see it? Are you guys seeing it?
Yes, boss.
So that's how to use the order block, or that's an order block. Then let's see, let's look for a bearish, a bullish order block. Let's look for a bullish order block. Now you can see we have this last green candle here, this particular one. It's an order block. Price move away from it. Now is there a return into it? No, there is no return through into it now. Okay, now look at this particular order block, this last green candle here. It's a bullish order block. Where is it again? This particular one. You put it at the open. Now the most sensitive area is the open and the 50% of the order block. Now look at the 50%. You can see there was only a wick through. It wicked through 1, 2, 3, 4, 5, but it never closed below the 50% of that order block. Are you seeing it? So this is a very high probable order block. So all this week are just doing damages. They are just doing damages, nothing else. But an order block is where you see that the price did not close below the 50% of that order block. Now this is a high probable order block. Now there's a movement away. Now which of these candles, which of this green candle are we going to use? Is it this one? Hello guys, which of this candle? We have 1, 2, 3, 4, 5, 6 green candle before this movement away. Which of this green candle we are going to use as our order block? Is it this one?
No.
This?
No.
This?
No.
What about this?
Yes, I think that is the best order block.
This is the best order block?
Yes.
Okay. Any other answer?
Yes. The last candle before.
Which one? This one? Or this one?
Yeah.
This one?
Yeah.
Okay. So the other block you are going to use here is this one. Because it has the highest body. All this one, they are just consolidation. So all these other candles are happening inside these two last candle. So they have the largest body. So this 1, 2 candle, they are what? Other block. All this one are happening inside it. You can see no one close below this body and no one close above it. So all these two last candle are your bearish, are your bullish order block. So the area that are sensitive on this bullish order block is the open and the 50% of that order block. Now let's extend it to the right. You see price fall short of it a little. It did not get there. Perhaps in some broker you will see that the price got to there through week and start moving. Perhaps in some, but that's your bullish order block. You don't use the bearish order block. You don't use that or the ones inside that consolidation. Are you getting it?
Yes. Okay. The biggest body.
Yeah,
The one that
yeah.
has
The one that has
biggest.
the largest body. That's the one you are going to use. Now look at this one. Look at this last one here. Last body. Movement away from it. Now price return back to it and started moving again. Now these two, let me mark it out. This is your bullish order block. Now price reject away from it and return into it and started moving. Now it created another up and down close candle in a bullish trend. So now those last two candles are your what? Bullish order block. You can see price came to it and it reached the 50% of that order block, of this two order block. 50%, that is the mean threshold, and it started moving again. Can you see it? Now this one is also an order block, but I will not use this particular one because of this is the high, this is the low. There's no any significant movement away from it. So to me, this is not a nice order block, but although they respected the order block with this movement into it and it's going up. Now this is another order block. So the places you should the places where you should stop stalking an order block is when price has met, that is you've done your analysis on a higher time frame, and let's assume your target was this low. Your target was this low here. So any bullish order block around that point, you are not supposed to use it again because it will fail you. Let's assume this is your target and price has reached your target. Now we have a what? Bullish order block and bearish order block here. This last two green candle and last two white candle. So if you use them, they will fail you because price has already what? Reached its target. Now when price is expanding to draw on liquidity, every opposing candle that is closed in that direction is an order block. So for a sell trend, when you see a white candle, I'm using white and green. When you see a white candle, it's my bearish order block. Then for a buy trend, when you see a green candle, it's my bullish order block. So I hope you guys now understand them under order block and how to use it. Now let's see how to use it with session. I've not been trading this pair. Let me go to GU. This is what we've been trading. Now let me remove all these things. Now let me look for my New York session. My New York session starts here. So I see my New York session, my London session starts here. Now if you look down here, you will see 9. So on my own broker, 9 o'clock is my London session open. Then 12 o'clock.
Sorry, which broker are you using? Which broker are you using?
Uh,
Which broker
I'm
are you
using a
using?
0 GMT broker. Now, if you want to know, if you check here and you see that it is 000, that the time is 00, start from 0 and not 21 or so, then you're using a 0 GMT broker. So a 0 GMT broker, 9 is the London session open. 9. Due to daylight saving, 9 is the London session open. So 12 now is the London session close. So where's 12? This is 12. This is 12. So this is my London session close. This is my London session close. Now, this was the last candle this was the last up close candle it printed during the London session. Now, during the New York session, it came back into that other block. Can you see it? That was printed during the London session and it started selling off. Now 14 is my beginning of New York session. 14 the beginning of New York session. And 17 is the end of New York session. All these things are things you should have done on your own broker. I did all this on myself. Nobody teach me. That's because of how I was practicing. Now, these are the up close candle in the New York session. This one here is my other block. So price did not return to it. So but that's my other block of the New York session. So let's check New York section of this day. New York session, this is 14. This is 14. Where is 17? This is 17. And this is another block, although it's inside the same retracement what happened during the New York session. It came back to this other block and started moving away. Now it formed these two close candle. These two up close candle. Trade away from it. Then after the New York session, during the London close, it came back into it and it did this. So to me, if I'm using other block concepts, as long as price have closed above this 50%, I will not see it to be a highly probable order block. So I'll wait for another setup. But although this one was okay and it did this, it came down here. So that's it. That's how to use order block. So if you have any question, you can ask. So if you don't have any question, then on our next class we'll look at fair value gap. Then the next class we'll look at breaker block and mitigation block. Any question?
Yes, I have a question.
What's your question?
My question is that is it possible for an order block to happen twice in a particular session. I mean, in a particular, yes. If, for example, if I'm in London session, is it possible that I can have a two bearish order block in a particular session?
You can have more than 1, 2, 3 other block in every session. All we just need to know is, all you just want to see is a very good movement away from it. Please, who is that? Where is that noise coming from? So all you just want to see is a movement away from that other block, like this movement away from it. And another thing is, this movement has not gotten to your draw on liquidity. This movement has not gotten to your draw on liquidity. So any retracement will be looking for a fair value gap or an order block. And if you have a fair value gap inside an order block, that is a very strong confirmation for you. And this is your order block. This is 50% of the or the main threshold of the order block, because you have 3 consecutive close candle, 1, 2, 3 consecutive up close candle. So now this is the opening of that order block. Now the main threshold is here. Price did not even get to it, but because of this fair value gap here, price rejected away from it. So that's it. It doesn't matter, you can have more than 1, you can have more than 2. Now all you just want to see is a clear movement away from it, and price has not reached its target, meaning your draw on liquidity. So it may react on the first one, it may not. It may come back and react on the second order block. Since we have a scenario like that last week, let me check. Can't remember where it happened. Maybe then I was looking at 1 minute time frame. Perhaps I was looking at 1 minute time frame. I can't remember where it happened. Can't remember where it happened. This was an order block. This particular one, I think it's this one. We have this order block here. We have this week, no good movement. We have this week, no good movement, but we have 2 body close candle here. So I was expecting this side to react, but it did not react. Then my stop loss was at this high. It did not react. Then it got to this order block and took me out. So this order block was what I was now looking at, but I did not mark it. I did not pick that trade. I did not pick that trade at this order block. I think it was around here that I picked that trade, or I never picked that trade again that day. I can't remember, but it took me out here. So I did not consider this other block. I think it's because of the time. Can't remember again. It took me out here, sure. So more than one other block can happen in a session. All you just want to see is a clear movement away from it. Now there's a week here, week here, week here, week here. So there's no clear movement away from this other block. I think that was the mistake I did. There was no any clear movement away from it. So this is the other block they targeted. They target this other block, and you can see inside that other block, you see another fair value gap. It's a fair value gap, so they target it. Now look at this up close candle, this particular one. They move away from it. You can see the movement away from it now. They came back into it and continue moving down. So all I just want to see is a clear movement away from the other block. Once you've seen a clear movement away from the other block, then that other block is likely going to be a highly probable other block. And remember, the direction of the market, the bias of the market is very important. If you don't know the bias, it will just be a failure setup for you. So any other question?
There's something I want to ask.
Okay.
Like I find it very easy, like to analyze in a particular time frame, like going to one time frame, going from there to 1 minute time frame. It used to be hard for me.
All you just need to do is project your higher time frame into your lower time frame. Now that your higher time frame should be a reference point for you in your lower time frame. Meaning whatever you want to do in that lower time frame, you must it should always be happening inside that your reference point on a higher time frame. So you don't use your M1 to do analysis. You don't use your M5 to do analysis. No. M5 are just used for entry. If your analysis is on M15, then you can use your M5 and M1 for entry. All you just want to see in that M5 and M1 is price reaching into your reference point on the higher time frame. Once price has reached there, then wait for that same signature in that M1 or M5 before you pick your trade. That's how simple it is.
Yes, that's what I thought.
That's how simple it is. And because maybe there is around this trend now, this movement here, this week here, you can see it may be a very good body close on M1, and there is this other block here. But the thing is, your analysis is done on the higher time frame, not M1. M1 is just for entry. So what you just want to do is to see what has happened in the higher time frame. Is M1, has the M1 already retraced to that reference point? If not, so don't pick it. Wait for it to retrace back to a premium in the higher time frame before you start looking for a signature move in your M1. Hope that's clear. Hello?
Yes, sir. Yes, sir.
So, any other question before we say goodbye to today's class?
Yeah, I have questions, sir.
Okay, what's your question?
Yeah, how can I know a valid order block?
That's what I've been saying since now. You should have a very clear and obvious movement away from that order block. Once you've seen it, first of all, you need to know the direction of the market, where the market is drawing to. That's the most important. Then once the trend has started, they've already done their stop hunts and there is a clear market structure shift. Then the next thing you should be looking for is every opposing candle close in that trend's direction, it's an order block. Now, once that candle is printed, you want to see a clear movement away from it, like a kind of displacement away from it. Then a return into it will make it valid. Are you getting it? So if there is no clear movement away from it, that order block is not a valid one. You must wait for that movement to leave it. And once the movement away from that order block has reached its target, its draw on liquidity, then don't use that order block again, because the target has already been met. But if the target is not met, that is your higher time frame target has not been met, you can trust the order block. So these are the three things. First of all, know the direction of the market. Secondly, the order block, there must be a movement away from it. And thirdly, that movement away from it must not have reached the draw on liquidity. So any retracement into it will make it valid and it will be a high probable one.
Okay, sir. Thank you, sir. Another question, sir.
Okay.
Yeah, for every bullish order block, must it always start with a bearish candle?
Bearish candle
I don't know, maybe you understand my question.
Is your bullish order block. Bullish candle is your bearish order block. Are you getting it? Because when the market is trending up, you only want to be seeing that up close candle. So any opposing candle there is your bullish order block. Meaning if the market is buying, all you just want to be seeing is buying candle. If you see a sell candle in that trend, that sell candle is now your bullish order block. Are you getting it?
Okay, sir.
That's it. Hope I've answered your question.
Yes.
So if there's no any other question, let me just end the class for today.
Hello, sir.
Yeah.
Sir, please, can I ask a question from the video you sent this morning?
Okay.